Hey, what's going on, guys? Welcome back to another video. Today's going to be like a weekend market analysis. I'm not going to do any trade recaps. I'm not going to do any counter recaps at all. Maybe like a weekly recap, monthly recap of just what happened to set our buys for this week and these upcoming days. So the first thing we look at to create a bias is to look at sentiment news, sentiment analysis, and that's the overall market, right? What is the overall market doing? Then you kind of go against other markets, right? The Dow Jones, the Nasdaq, S&P 500, kind of compare those, how they've been performing for these past weeks / months. Really want to see the big picture out here. And so you see how those are performing. Then you look at the VIX, I think it's called the VIX. You look at DXY, you look at all the currencies, right? All the Forex. That's also important. And so you see how that's doing. Then obviously the biggest thing, right, is the news. So we were talking about fundamental news, right? So what does that look like? Obviously we have our CPI, core PPI, stuff like that, unemployment claims. That's news, yes, but that's released news, right? We're expecting those news. What about the news that are on the Wall Street Journal or CNBC or whatever, wherever you get your news? Look at multiple sources. Have a bias for everything, obviously. Have opinions for everything, but don't just look at one source. Look at all the sources. And if you can, compare two sources to the same topic and see what it's actually about, because you might get two different authors writing about two different things and two different opinions, right? Look at this news. Look at what's maybe impacting the car system or the car dealerships, or what's impacting, recent companies that just came on the market. What's impacting the sectors, right? The electronic sector, the tech sector, the housing sector. There's a bunch of sectors out there that you look for. What's impacting that? So we're gonna hop on SPX here in right here. And we're going to start right from the monthly, like we always do. Now, keep in mind, we're not starting a new month, but we just want to look at what the monthly did after last week. Maybe did it raise prices? Did it lower? What exactly happened here? What happened? So let's go ahead and just clear this for a second, just so we have a clear graph so we can see. So as of right now, okay, what I'm seeing is manipulation. That's what I'm seeing, okay? The reason why is if you look at this price action, I'm also kind of like, now I'm like super uncertain. Like as of right now, I have zero bias. I'm 50-50, and I'm very undecisive, and I don't think I will have a bias for tomorrow. Might as well just do day trading without a bias and just kind of scalp here and there. But if you look at this, right? We have this huge monthly bull rush up here, right, is unable to get above these highs. And then it kind of like sweeps these highs up here, doesn't get to this high, just kind of gets to this swing high, sweeps that, which we can see this down move, which is fine. And then this down move, as we called, right, there was that weekly order block, weekly fair value gap on NASDAQ, and then we rebound off that. And then guess what? Then we start being bullish again. And this bullish candle indicates that we didn't even create a doji. Like we didn't create a doji at all. This was just a straight shoot up. And so in 17 days, I want to see basically in 2 weeks, or more than 2 weeks, way more than 2 weeks. And no, yeah, a little more over 2 weeks. I want to see in basically over 2 weeks where this monthly candle ends up. If we end up higher, then I have a strong indication that we are going for these highs up here. This high and that high. Okay? Clear indication that that's happening. So I'll be bullish on the next month, right? If at one point we go and trade higher, which is possible, right? Price can go and trade higher and reach higher PD arrays in the discount zone, and then we go short and we go lower, because there's also PD arrays down here waiting for price to come down, then I'll be short on monthly. As of right now, I'm 50-50. I was bearish. I was waiting for some kind of bearish price action here. As you guys saw in my last video, and I've been calling this out for weeks, right? We had this weekly fair value gap, this weekly imbalance that was happening right here. Then we had this huge rejection here off the weekly. nice little down move, and all of a sudden in 1 week we buy everything back. The next week we go even higher and we sweep these highs like it was nothing. And I'm seeing price possibly even filling this gap. But I want you to remember, these prices here have closed above this swing high, this monthly swing high. That's a huge deal for me. It might not be a huge deal for the hedge funds, but for me, it determines my bias. And as I told you guys, if this closes above those highs, it's looking bullish. And I'm not ready to trade bullish price action right now in this huge downtrend. Because remember, we're still like, this is still like a downtrend right here. This whole thing, this is a downtrend, right? We have lower highs, lower lows. Then you have lower lows, lower highs, lower low, swing low, and then you have like a higher high. So this also is a market structure shift, which you can do this right here. We'll just do that. So why is that so big? Why is the arrow so big? Wait, what? Let's not do that. So market structure shift happened here. What do we look for after a market structure shift if we want to go bullish and target other highs up here? We want to look for some kind of imbalance, right? Some kind of imbalance where we could buy back in. The hard part with this is the only way you can really truly do that is if it's in the premium zone to buy back. So premium, right? You draw the fib, so from the swing low to the current swing high, which would be currently that in a way, wherever we close the weekly. You draw your mean threshold in the current right here. This would be the 0.5. So this is the discount area and this is the premium area. So let me just draw this out so you guys can understand. Okay. So premium or oh shit, no, my bad. This is premium, this is discount. So we want to buy in discount, we want to sell in premium. Shit, I got that messed up. My bad. That's my fault. Okay. So wait, no. Whatever. I mean, it's you want to buy, it doesn't matter where it is. You want to buy when you're in discount down here, okay? You want to buy when price is down here. And why? Because if we have an imbalance here and it bounces back off, this is where all the buyers are going to step in and buy, right? So then you look at the daily, because we're on the weekly right now, and when you look at the daily, you're like, where are these imbalances? And so when you look, the imbalance that's clearly there, and that's not there on the weekly, is a weekly or a daily fair value gap that's sitting right here, as you can see. Boom, bam. Okay, so that would be your daily imbalance. And why we would come here is because it's under the 0.5 right here. So I'll just move this like right here, so you guys can see, right? It's here where buyers would start buying. So we might even go under, sweep this, and just start buying. But that means that we can't go higher if we don't go lower, right? We did create this little daily imbalance, which was probably going to be targeted, you know, when we come down after this market structure shift. We can see that coming down here. That would be like our first draw on liquidity to be filling this fair value gap. And after that drops, this would be the next gap. Do I see price coming into these gaps right here? No. Could it tap into this gap? Yes, 100% for more PD raise. Will it trade all the way in this gap? Absolutely not. Not if it wants to get bought back. No way. And then you also have a order block, like a bearish order block right here, which actually is now considered a breaker block. So this right here is a breaker. You can even mark like the opening price right here. Boom. Text. We'll do breaker. And we'll do this to the right. Okay, so that's even more confirmation that that's where we could, I guess, target where price would target on the daily, and even on the weekly. This could happen. This could theoretically happen in a week, but the week would have to be fully bearish, which is what I'm hoping. And to further confirm this, I guess, thesis or bias, we have news. Okay, so this is the other part of the sentimental / fundamental analysis, is the release news from Forex Factory. You can also look on FOMC, their website. You can look on other websites that, carry out news. For example, if we go on CPI here, it's on the Bureau of Labor Statistics. So you can go on their website here, their official .gov website here, right? And you can look at the news individually if you want. You can see more reports, but the Forex Factory just kind of puts everything that you need to know as a trader into one website in there. I'm 100%, I will assure you, there are some softwares and platforms that offer you real-time accurate news with real-time data, and some news that might not even be important might also be on there. But you got to pay for those data, and as of right now, I don't need to pay for that. So what do we have on Monday? We have nothing. Okay, so Monday will be like a consolidating day, right? Because as we know, tomorrow we have core CPI monthly. Then we have CPI, and then we have CPI for the yearly. And that, ladies and gentlemen, that is a big impact. That is a real red folder. CPI at 8:30. That's going to be an impact. And if we look and see what it says, if CPI is greater than the forecast, that means it's good for currency. If it's good for currency, it's good for DXY. So DXY will go up, and that means that SPX will go down. That's exactly what we want to happen. So we need this to be greater than 3.3. We need this to be, go back to 3.7, 3.8, 3.10, 4. If we see 4, that'd be perfect. Like, we need to see greater than 3.3. If it's lower, then unfortunately, I think we're not even going to trade for the whole week. I'm not going to lie. And then Wednesday, so after CPI comes out, usually the next day is like let's settle in, let's buy back, let's sell all this, let's consolidate, let's not trade. Like, there's a lot of people doing different things, and it's all over the place because price has dropped so much that it creates so many imbalances and just one big imbalance in the market for the weekly, that a lot of people are trying to buy everything back, sell everything back, right? Because listen, a lot of people might have positions. A lot of people gamble this stuff, right? Even though it's not like fundamentally right to do that in your mind, people gamble this. And so people have big positions when PPI and CPI comes out. And I hope you know, when the price drops and you bought, when you sell your position, it's going to keep dropping because you sold your position as a buyer. So sellers are buying that, like, you know what I mean? It's a whole like vice versa. So you sell, it goes down. But let's say CPI went up and you shorted it, then you have to end your position because you're down 100 grand. You sell that position, market goes up even more. Now you're not making a huge impact, but imagine hedge funds will never, bet on CPI or anything. They'll wait after. But let's say someone has millions of dollars, like that could potentially impact just a little bit. And so that happens if you have millions of people betting millions of dollars over and over, that adds up, and CPI can have a pretty big impact after it's released, after everyone starts selling their losing positions or whatever. And then you'll also see, right, if people do get it right, let's say I put a 50 grand for CPI to go down and it goes down, guess what it's going to do? When I sell my position, when a lot of people sell their positions, it's going to start coming back up a little bit because we're selling our position. It's now bullish, But no, right after here, we have Wednesday, right after CPI, we have Wednesday, which comes in with core PPI, core retail sales, Empire State Manufacturing Index, PPI monthly, and retail sales monthly. That's a lot. That's a lot of info to take in. That is a lot of news to take in for right after CPI. Those 2 days are going to be the wildest day I've ever seen. That is a lot to see. A lot. And so this is good. In a way, this is very good, because if we see a lot of bullish action, which, let's see, greater than forecast, greater. Okay, that's perfect. This is perfect. If we see everything bullish on this here, then my bearish positions would be fucking insane. That means that the weekly and the daily would have been absolutely dumped past this imbalance all the way to the breaker, even further, or here. And then the next week we could buy all that back, and that's where I could be bullish. But for this week, I would be bearish, and I would be bearish on Tuesday after this news. If CPI comes out bullish, I would be bearish on SPX, and I would want to see price drop even lower, and hopefully create a breaker structure so we could actually go a little lower. Again, don't forget that we do have a bullish market structure shift here. I do know that, and hence why I'm now targeting to go lower. But in the big picture, I'm actually trying to go higher because of this market structure shift. I hope that makes sense in that bias. Thursday, unemployment claims. I mean, we can trade this. Really not a big slip. Only at 8:30, and then Friday we're good to go too. Let's look at, why is this? I don't know why that changed. So NQ, I did a little analysis before I started this. Basically the same thing as SPX. Okay, we have. I drew the OT on this one just so you can see, because NQ is a little more volatile and can have prices be reach some points before SPX gets to it. So usually NQ gets to price points that I'm interested before SPX get to them, and so that means that I can see how the market reacts to these prices, how it wants to go, where it wants to go, if it's getting manipulated, if it's just algorithm. So I can see that first. So obviously here we take out this monthly swing high, which we've set on SPX, which we have seen, but it actually just crushed it, right? SPX were like barely closing above it. Here we are well above it, and I drew the OT from this swing high to this swing low, and currently this is the OT zone. I have like two OT zones. I have this one and I have the OT V2. In any way, shape, or form, this like line right here, I don't know how to explain it, but this one seems to be the one that's getting repeated all the time. So we should hopefully see a move into this 0.705 golden zone, right? But I do want to see a bearish reaction, and if we do want to grab liquidity, I would hope so that NQ would grab this liquidity up here and then come back down to the imbalance that we have. Let's quickly just draw the imbalance that we have. The discount. Okay, so that means that our fair value gap has to be down here. So my analysis was actually wrong. Don't know why this is so far. Okay, that should be good. So that means that our fair value gap that we probably should be targeting is not this one, but it should be the nearest one here. So boom, bam. Okay. And then, like I said, we do have that breaker that does play a big part. I'll mark that too. So that plays a big part. And that's what I see right now. We do have a balanced price range right here that is trading inside this other fair value gap. So we have this. And then, as you notice, we have this bullish fair value gap. So we can expect price to come down right into here. What I want to see price come down to there, yeah, I would like to see price go even lower. I don't know, like just looking at this chart makes me uncomfortable, because it just, like, we want to go higher, but if we go lower, do we really want to go higher? You know, like at what point do we turn? At what point do we change our whole bias? Like what is happening? Like this whole 2 weeks have just been bullish. Just pure bullishness. Like just absolutely bullish out of their mind. My first thought for bias would be if we turn price down and we close under this consequent encroachment of this range. Because no matter how I draw the OTE, the consequent encroachment stays the same. And that's what I'm looking for. So if we can close under the 0.5 OT, then I would start maybe trading. I'm actually debating going short here with just like a few dollars in my stocks and see how that plays out. I'm actually pretty interested. I don't know how this I really don't know how this could play out. It's very intriguing. QQQ don't have a lot of analysis for this one. I mean, QQQ, you just see like this is what I'm talking about. Like if we go higher, like this is just clear indication that we want to break these highs. You know, but then again, anything can happen in the market. So we're just we're waiting to see. And now that I'm thinking about it, I'm not gonna take any positions until I see a clear bias, until I can see a clear trade setup happening. I don't want to jeopardize my positions nor jeopardize my bias by setting a pre-bias before the market has even opened at all. That's I think the last thing I want to do. DXY on the weekly, let's see how we're looking. DXY looks like it's like consolidating kind of. It looks like there's like an AMD kind of stuff. It looks like accumulation, manipulation under these lows, and then distribution up. That's what could be happening here. And again, if this is what we're looking at, right, the AMD, so we have like accumulation, then you have your little like manipulation down here, and then you have your like your full distribution up here or whatever. That could be what's happening, or we could just get rejected and come all the way down. I don't know. I mean, to me, DXY looks pretty bearish or bullish. It looks like those lows were manipulated, and I hope CPI. I pray to God that CPI is bullish enough to take us all the way to these highs, because that would be a miracle. I think that's it. I mean, I'll do more, but I don't like. I do more when I don't talk, because I have to. I have to really lock in. I have to really dial in. So this is just like a pre-bias determination. So actually, yeah, let's do these key takeaways. My first key takeaway would be don't trade. Like for me, this is for me, not for you. Mine would be don't trade until like after Tuesday. Just watch, right? Just watch how price reacts. Just watch what levels are being taken out and what levels are being targeted. Take notes. Take a lot of notes. Take a lot of pictures. What else? Wait for CPI. Wait for PPI. And wait to see where price is going. If bullish, then, you know, look for bearish PD arrays, bullish PD arrays, vice versa. What else? Be patient. This week is not going to be a good week because there's a lot of news. So be patient, right? You shouldn't be trying to get in the market 24/7. You should be waiting until the market gives you an opportunity where you can take advantage. Maybe don't swing trade today. Maybe don't swing trade this whole week, actually. Let's wait off on that. If you're going to trade real money, have your risk, you know, buy a contract of maybe $30, if not less. Have very low risk. Just kind of ease into it. Okay. No need to make $100. Just ease into it. $10 will do. $10 is money. Money is money. Okay. Remember your analysis. Do more analysis. Keep up with the news. And I guess we'll see each other on Monday or Tuesday or wherever I trade. Peace.